Many thanks for staying with the Trading Bell. I hope you got a thing or two from that particular interview we had about the real estate. Time now for the markets analysis, and I'm joined by the Head of Business Development, NCBA Bank, Samuel Gichohi. Many thanks for coming, Bwana Samuel.
You're welcome. Thanks for having me.
Now let's go straight into the look of the day. Quite some activity that we've seen now that the president has almost announced that the economy is open. I think there's a window there between 11 to about 4. But what does this mean for the markets?
Well, I think it gives us, yes, of course, more time for businesses to run. It does also signal the markets that we are now opening up, and so business will start coming back to the normal sort of time cycles. What I also think is that it will also, more business hours means people have more time to, visit whatever or do whatever they need before they have to be indoors. So that is generally a very good signal to markets, because then it also means that there'll be more revenues, more circulation of liquidity, which is good for the economy.
Well, after the announcement of the president's opening of the economy, one of the trending topics was booze is back. What does this mean for the manufacturing sector, especially for shareholders at EABL?
Well, I think, yes, there's expectation that EABL may have suffered quite a bit in terms of the volumes they would be selling under normal circumstances. Of course, notwithstanding the fact that a lot of people just moved their drinking habit home. But that said, I think that is good for the EABL stock, which we saw go down to levels of below 160, at some point about 158.
Wow.
But now we've seen in the last 1 week, we saw a rally. It's now trading at around 168. Actually, it touched 170 today, which clearly indicates that there was the expectation that this particular issue of pubs would be opened up. Markets will usually reward the expectation of a recovery, and I think that is why the rally happened.
Okay, that's a good one. And now that you've touched all the markets, looking at all the uncertainties that we have had, what does this mean? Because relatively we have been doing okay. What does this indicate in terms of just the markets in general?
Well, the market bottomed out around late March. Since then, we've seen about 12% gain across. This is on the indices. And if you look at that, in as much as we have had a bit of volatility, which is actually very good for the market, for the between March and early August, most of the activity was local investors buying, and the foreign investors on the selling side, which means that pushes the market down, because foreigners will be doing big tickets. Our local investors are not big enough to really sustain that, so it will usually push the market down. Last month, almost the whole month, we had foreign investors as net sellers for the first time since March. And you can see that in share prices of, say, Safaricom, which is, 30 shillings and thereabouts. It's been sitting around 30 shillings. We've seen KCB going to 28, 29, and that, 38, 39, which was sitting at around 34, 35 for the longest time. So that is an indication that foreign buying will usually push the markets up. And so as we open the market, as we open our economy up, then it means, because it means that we are doing okay. If you look at the statistics on the COVID end, we are doing much better than other countries, not just in Africa, but globally. It means that they're getting attracted to that, because in their countries, they're still suffering quite a bit, and their markets are still subdued because of the whole coronavirus issue. So that is actually a good thing, and it's been pushing the market up. So we've seen the rally.
So a quick answer here. So where are we? Are we on a dip? Are we on a stagnation? Are we on a rise?
It's a tough call at the moment to make, because then there is the uncertainties that are related to COVID-19. If a resurge happened, what will happen? So it's always, in finance, we say all else equal. If things stay the way they are, then we would expect more foreigners to start, warming up to our market. We are going into announcement periods, which we expect Safaricom to announce next month. I think it's their half year, and that usually excites the market. The foreign investor loves Safaricom. So that said, we expect that as foreigners come in, it will continue to push the market up. But most of the blue chips, particularly, say, the likes of Safaricom, KCB, Equity, EABL, are still trading at discounted prices,
Okay.
which means it's still time to buy because the market is more likely to go. We have more upside on this than downside.
That's good news for shareholders. In fact, now talking about the top gainers, the only blue chip company I see is EABL. I don't know whether this is because of the announcement.
Absolutely, yes. It's happened for the last few days.
Okay.
Almost a week or so. That's when we've seen that.
There's been a prediction that
yes,
this is good to
that
have.
means the market was anticipating the announcement yesterday.
All right.
Yes.
Let me get your quote. When others are afraid, be brave. That's you who talks a lot about it. Is it the best time right now to think about buying because of how the market has been, in your opinion?
It has been since March.
Okay.
When markets are down, and it's not a fundamental issue, it is an external factor that has caused it, and the external factor is not going to stay forever. It means that as we go back to normal, then the stocks should go back where they were before the whole problem started. So it means as COVID-19 begins to be in control, it means that there's markets and the economy will start to pick up. Okay. And so it's been a good time to buy since March. We've had our turbulence, our volatility, but generally it's been a time to buy.
Wow, many thanks, Gichohi. But before you leave, let's talk about the shilling and its effect on especially importers. What's your comment on that?
Yes, the shilling has lost quite a bit of value to the dollar. Of course, then it means we're getting less dollars for every shilling. Yeah. So yes, the importers will probably have to fork out. But I also think it's always good for the shilling to be allowed to not be too protective of the shilling, so that we have a real picture of the valuation of the shilling, which for the longest time we felt it was overvalued. Okay. But so I think it was going to happen, but hopefully as our economy recovers and as our economy strengthens, then the shilling will also at least stabilize.
Many thanks for those insights, Gichohi.
You're welcome.
Now, I want us to just cross differently in a different way to Markets 101, because I would like you, now that you're talking about a situation where we need to be thinking about investing and the likes, and the question is this: what is this mindset the viewers today should have, especially when thinking about the money markets funds and investment? I just want to put you on the spot as a man who is big in these issues of money market funds. What would be your quick advice to them?
Well, my thinking right now is focus on what can beat inflation. Okay. I think inflation is about 4.5%. Yeah. Most money market funds, especially those dealing with fixed income, money markets usually means they're dealing with a lot of fixed income assets. They will give you a sort of return, even if it is 7-8%. That beats inflation and protects your principal. So if you're not feeling like taking much risk and you have money that you want to protect, that would be a very good way to go. But you also need to look at some risk, and that is why now stock markets and equities come in, because then you want to have something that, you can say, I'll take some risk here, but when the upside comes, it's going to beat inflation. But that also means you're trying to avoid stocks that will be hard hit if something goes wrong. So you need to stick with the blue chips. And that's why you've seen a lot of investors just sticking with Safaricom, KCB, Equity, those big ones, Standard Chartered. So those ones tend to be more stable. And also on the upside, right now, because they're discounted, they're good stocks to buy. All right, thanks a lot, Gichohi. You're not yet done with us, because we have a question that has been asked. And this question is coming from Twitter. Kaylee is asking, what's a dividend drought? What's a dividend drought? Yes, we've just been talking about the effects of COVID. Now, a lot of companies, because of the whatever measures they had to take during the COVID-19 time, and probably because of the effect of this period on revenues and income, etc., means that they're not going to be making as much, but they also want to protect their reserves. So you'll find that companies will either cancel dividends because they feel they need to hold on to the money, since there might be a period of no profit or a period where they need more resources, or maybe a company is expanding and they feel they don't want to be paying out in cash. So what happens is they cancel or they don't pay dividends. And so sometimes in an economy, especially in this period, we are expecting, for example, in the next announcement period, to see most of the companies that are very good dividend payers, like ABSA, Barclay, Centum, ABSA, Centum, Equity, holding back or cutting their dividends by, say, 50% or so. Some of them, I think ABSA had announced that they will not be doing it. So that in itself is a dividend drought, because then there are no dividends coming to shareholders. And we have those dividend-seeking shareholders who will usually be affected the most by this.
All right, many thanks, Gichohi, and I hope, Kaylee, you've been rightfully answered. Time now for the historical fact for this week. So that's it from us right here on the Trading Bell Show. I hope you got your nuggets about the real estate and how it's doing from the CEO interview with Shelter Afrique. And many thanks, Samuel Gichohi, for coming through and telling us about how the markets are doing.
Thank you. It's always a pleasure.
All right. That's it from us right here. Of course, remember, you can give us your feedback on our social media handles appearing at the bottom end of your screen. My name is MC. See you next time, same place on the Trading Bell.